How's it going, fellow traders? It's Magic Trader here, and this is the May 23rd, 2017 CFTC COT report analysis for this week. And here's the report I posted up on the community this weekend. Had a little bit of a busy weekend. Went to do a little bit of antique shopping, which was a lot of fun. If you guys don't ever go to antique auctions, I'd recommend you guys check one out at least and see how much fun you can have at these places. Anyways, on this report I wrote a little piece on journaling. I've been keeping a journal, and I found it to be extremely helpful for my life, and not just for helping me figure things out or work through issues or things like that, but it's also good for keeping a record of your accomplishments and keeping a record of your thought process and what's important to you and how you look upon life and how you make your decisions and all that sort of stuff, because I think it's important that we leave something behind for our kids, something that one day when they're older and they can really appreciate some good advice, they can just open up your journals when you're no longer around and read through them and get a glimpse into the deepest part of your mind. So anyways, I think that's important to do, and so I've been doing that, and what I've been doing is also making use of my journal for my trading. So I make note of trades that I take, setups that I'm looking for, conditions of the market, why I'm looking to take certain trades, all that sort of good stuff, and it's been extremely helpful for me. So just wanted to write a little piece on that because I do think it's important to do, and so yeah, you can go to the community and take a look at that write-up on the journal. So here's a breakdown, the latest report, the May 23rd report. All the data is here. You can take a look at the report on the community and get all the data that you need from there. Okay, so let's start off with what the data has presented to us. So on gold, what are we seeing here? Gold is starting to become a little bit more aggressive here. We have an increase from the 221 to 241, and this happens with this bullish candle right here, this big one here. So we react from these areas here, and we react to the upside. Now we're sitting within a supply zone, and as we're heading up, shorts get closed out, which would make sense because we're moving upwards, and longs are becoming aggressive, which would make sense because we need we need demand to fill in for price to go up. But what I'm starting to see is the sells are slowly starting to become green. Okay, just starting, so it's really iffy now. It's not time to make any decisions. But again, like I mentioned, we have tested a 3-month trend line. We reacted to the downside. We're hitting these areas and reacting back up to the upside. Right now, for me, a lot depends on what the US dollar is going to do, and we're going to look at that pretty soon. So I'm not going to be taking any positions on gold right now. I'd be interested in taking longs if this area was to be taken out and we had good setups on the daily presenting itself to go long, because as you can see, the bias is long. All right, they're heavily long gold, and shorts are slowly entering into a cool territory, and longs are starting to become aggressive. So I'd like to see how it reacts off of here. Maybe a little bit of a drop and then a continuation. So I'm just sitting back waiting. I'm being patient with gold, not making any decisions. Okay, let's go to oil. What are the institutions doing for oil? Well, they're still aggressive long, but they've taken a lot off. Okay, and that happens with this candle going straight up here. So price rallies up, and what do? They take off longs. So they're closing off longs for profit with this big rally in price, and shorts also close off heavily. All right, so this big rally up, they close off longs, and they also close off shorts. So reducing short exposure. They used to be aggressive here. That's because price dropped into the non-2-to-1 monthly demand zone right here. And if you take a look at the percentage, we got 73% exposure geared to the long side. All right, it used to be 67, and now it's rallied up to 63. Colorations of the cells are starting to turn green, so we're getting a decent bullish signal here. An increase from 328 positive to 372,000 positions geared to the long side. We do have monthly demand in control, hasn't reached 2 to 1, so I'm looking for some good trades to go long here. But the key thing here that I want is this trend line to be broken. So I'm waiting patiently for that trend line to be broken, and I'm also going to be watching the data. So for me, no trades on oil as of yet. So now we have the US dollar. So like I said before, a lot depends on what happens with the US dollar. Okay, for me personally, and I'll tell you why. Because we could get a really big move to the upside right now, because if you take a look, we do have a weekly demand zone nested at a right there. See, there's the monthly demand zone. So that weekly is nested within a monthly demand zone. So let's take a look. Weekly nested at a monthly demand zone. And if you take a look at the monthly chart, yep. So it could still drop to get the meat of this move, but it doesn't necessarily have to. And we've seen this before where we see nested zones and they work wonderfully and then price rallies to the upside. So very possible that we see that on this chart. Very possible that we just have a big move here, tests, comes back, and then shoots up like a rocket. Okay? Or we could get price to react here, a deeper penetration, break through, and then go here. And then longs from there. So that's very possible too. Alright, so what do we see with the positions? Well, we see that longs are increasing from 51K to 54K, and we see shorts increasing from 17 to 23, now becoming aggressive. So shorts becoming aggressive with this move down, which makes sense. They were dropping price right into an area of demand, so you'd need it to be aggressive. So that's why that's aggressive. And now we see long exposure dropping from 75% to 70%. Big drop over the last few weeks. Take a look, 83% to 70%. So long exposure getting weak, and also net positions dropping 40K to 31K. So nothing important here to see. All right, for at least for longs, nothing really that sticks out and makes me want to take any longs. What I'd like to see is what's going to happen in this area here. What are the institutions going to do? So are they going to start adding longs? Are they going to be closing off their shorts? Or are they going to be adding longs and shorts at the same time? So whatever they do over the next coming weeks is going to tell me what I should expect from the US dollar. And so I'm looking for signs from the institutions to show me what they're going to do with the US dollar in order for me to be really confident in taking other trades on the other pairs. Alright, so that's what I'll be watching on the US dollar. And so let's take a look at the Aussie. Aussie longs are starting to enter into cooled off territory. Shorts have been cooled off for quite some time now. Alright, and net positions is right here. Positive 2.6 thousand, which is nothing much. But we are in a monthly demand zone that hasn't reached a 2 to 1, so I am waiting for proper setups to take this to the upside. But I also want to see the confluence of the institutions backing this up by entering in longs. So we've hit the demand. What I would have wanted to start seeing is the longs starting to be build up from this area. And we get this move, but it's not really strong. We're testing this weekly 28 EMA, which isn't really important because we don't have a trend on the weekly chart. So what do the cells tell me? They're blue. That means do nothing. Stay out. So I'm waiting for signs to go long here, but I haven't seen them yet. And on the US CAD, longs are aggressive right here, and we got shorts are cooled off. One cell have cooled off, so it's not that important. But take a look here. This is strong. Very strong. 81% of the overall exposure from the hedge funds are geared to the long side. And net positions are aggressive. 99,000 geared to the long side. So remember, we got a 3-month demand zone in control. We're hitting this monthly supply zone. We're dropping now, hitting this weekly demand zone. I'm waiting to to take positions here. I got orders here to go long, and for me, they're a good trade setup because we got the backing of the institutions who want to go long. Very, very strong bias to the long side. We got the US dollar hitting a weekly zone nested within monthly. So for all these reasons, I'm willing to risk my money to go long on this pair. Okay, US Swiss franc, what do we see here? Longs getting a little bit aggressive. Shorts still cooled off, although we have an increase in shorts as price dropped. So that's why we got the drop, was the increase in shorts. But geared to the long side is the bias here, because 81% of their overall positions are for the long side. So I'm not making any moves on this one. I don't really trade this one unless the setup is clear, and with all this type of price action, nothing has been really clear for a while, so I'm not making any moves on this one. And now we got the euro. Let's see what the euro says. Longs are aggressive, super aggressive, 164 to 175k. Shorts are super cooled off the last 3 weeks, even further drop from 126 to 110k. The bias is bullish, sorry. We have 61% of the overall exposure geared to the long side, and we have for the last 3 weeks a positive number. Net positions now plus 64,000. So very aggressive heading into this area of supply, which they would need to be to get price up here. Now is the key. Are we going to see a drop? Very well, that could be happening. We see price action showing us that price is filling in some supply. With the US dollar reversing, this could go straight down here. Alright, I'm looking to take short trades on this pair, even though the short-term bias is long, simply because of the fact that the supply is being filled in, and the US dollar is showing that price is ready to reverse. Alright, so waiting for clear setups on that one. Pound US dollar, what do we see on the pound US dollar? We see longs are getting aggressive, shorts are cooled off, but just one sell of being cooled off, so nothing really to see here. 2 sells of bullish bias, but we're hitting supply. So I'm looking to take trades short here because supply is in control, and then down here I'm going to be looking for the signs of the longs to continue to become aggressive, and then I'll take longs down here. So I think what's happening here is, look, longs are becoming aggressive. Longs are aggressive with this candle here, which makes sense. They ripped price right up into supply. Supply gets filled, but we don't see a very big reaction here. So supply is being filled, price is starting to drop. We'll see next week the supplies on the shorts, we'll see positions going up. And I'd like to also see some profit taking on the longs for the move down. And if we see those figures, then it'll be beautiful to take some shorts. So I got some trade setups ready to take this down here, and then I'll wait for confluence with the hedge funds to see signs that they're going to be adding longs down here, and then I'll be opening up some longer term positions to the upside. US dollar, Japanese yen, what are they doing? Longs are still aggressive, shorts are cooled off. 69% of their overall exposure is geared to the long side, but this chart is just very messy. I'm not taking any trades. I wouldn't mind going long if this area breaks, and then I'll wait for the right setups, as long as they're still aggressive with their longs and shorts are cooled off, and all this is making sense. Alright, and last is the Kiwi dollar. Longs are cooled off, shorts are somewhat cooled off, but not as cool as the longs. Long exposure is 38%, meaning the power lies with the shorts, 62%. Net positions are a negative 9.2k. We have this new area of supply here, so I think price is going to head up into this area, and then we're going to see a reaction to the downside. Okay, so another thing is, when I look at this chart, what this is telling me is that there's a very good chance the US dollar drops even further because of the fact that this can go even higher. And we see that with a lot of the charts, right? You know, that's not a good example. This one's turning, and this one's turning. This one can go further down. This one could go further down. This one could go further down. And then we have the US dollar. So it looks like a lot of pairs can continue going further down, can continue making a move. So that's why I'm thinking the fact that this can continue going up means the US dollar can continue going down, and because the other pairs are showing similar type of potential moves, I'm kind of just waiting to see if that move is going to happen with the US dollar, so I can make better decisions with the other pairs like I've already mentioned. Alright, so that's pretty much what the institutions are doing with their positions and what I am waiting for in order for me to take some trades. Like I said, I got some orders in already. If you want to see what those trade setups are, you can go to my live journal. Some of the setups aren't there just yet, but I will be spending some time inputting those setups into the live journal. Alright. Now, the only thing we got to watch for of any importance is on Friday we have non-farm payrolls, and besides that, it's a pretty uneventful week, but I think we're going to get some good action this week nonetheless. Alright, so that's it for now, guys. Enjoy the week and trade safe out there, okay? Take care.